Hi guys, and welcome to today's video. In this video, you're going to learn how to combine timeframes, multiple timeframes, to get the best entries. Why are we talking about this? Well, you may have got confused. You may be switching between timeframes up and down, higher and lower, and you're confused about what do I actually do? Which one do I actually look at? You may be looking at one time frame, and then another time frame is telling you something else. You've got something bullish, and then look at another time frame, it's bearish. So which one do you trade, and how do you do that? Well, I'm going to cover that in this video. Okay, so first things first, are you choosing the right time frame? The purpose of this is to avoid multiple time frame confusion, like I just said, and to get more precise entries with higher risk to reward. You may, if you're just using one time frame, a daily, let's say, and you're just using the daily candles, you will be waiting longer, and then you've got less precise entries. But when you drill down into the candle inside the day, for example, if it's a daily candle, you will be able to get a more precise entry and a higher risk to reward. Now, what are the combinations? Well, you can use this table as your guide. So on the left-hand side here, we have the higher time frame, and on the right-hand side, we have the lower time frame. So let's say that you're analyzing and you're deciding your bias on the weekly, then you will go down to the 4-hour and then look for your entry. And so on with all of these time frames. So the daily, you go into the 1 hour. If you're analyzing on the 4-hour, you go into the 15 minutes. If you're analyzing on the 1 hour, it's the 5 minute, and a really, really small time frame for the scalpers out there. The 15 minute, you can use the 1 minute. So what does that look like? Well, if you're identifying a trend on the higher time frame, so on this side we have the higher time frame, and what you want to do is you want to get in on the next retracement to continue. Then you would look at this whole move on the lower time frame, and then this whole move would look like this, and then you want to get in on retracement. So this will help you pinpoint how to get in on the lower time frame, and these are the combinations. So if you've got a clear picture on the higher time frame, then you will go to the lower time frame. If you don't have that clear picture, then you don't go to it. Now, the best thing to do is to really get used to the time frame, because the candles look a bit different as well. So decide on the higher time frame that you're actually using, because otherwise you'll get really confused and you will just be seeing everything everywhere. So decide on that, and then once you pick that, you will combine them. So let's have a look at how we're actually going to combine them. So here's an example, and let's look at this step by step. Now, confusingly, I've got the higher time frame, which is the weekly here on the right hand side, and I've got the 4-hour H4 low time frame on the left hand side. So let's just go with it for now, and let's look at what we are seeing. So the confusion begins when, first of all, you see this downtrend, and then on, and you're asking yourself, is this a reversal or is this a pullback? And now we're going to continue moving down. You look on the higher time frame, and the higher time frame is showing you an uptrend, a retracement, and now the question is, are we going to continue going up? And that higher time frame is certainly suggesting that. So this is where you will stick to your time frame and then go to the lower time frame to make your decision. Let's clear that up. And now look again. So first of all, we're going to focus on a higher time frame only. And the higher time frame says that so far we're creating higher highs and higher lows. And when we get to this point in the retracement, if we have, for example, a level that we're interested in, and we mark out this level, then we know that when we come to this area, it is a higher probability that the market will likely create some kind of reversal. Now, of course, you can see the reversal on the higher time frame, on the weekly, but if you drill down, and this level will be, let's say, somewhere down here on the lower time frame chart, then you can expect that this downtrend is just a pullback in the higher time frame. So you've got this being this, if you can tell that. So let's wipe that again. And therefore, you will not be swayed by this movement because you know that you are expecting a reversal at some point. Now, after that, you will then be able to focus on the lower time frame and then wait for that reversal to happen and then pick your trading opportunity. And then expect the market to continue because overall we are on the higher time frame. So that is, in this case, a combination of the weekly with the 4-hour. Now let's go to another example. This is an example with a lower time frame. On this example with a lower time frame, let's say that you made your decision, you decided to use the high time frame being your 4-hour, and then your lower time frame will be in the 15-minute. Of course, using this exact same example, on the 4-hour, you would be seeing something different. So on the 4-hour, you'd be seeing a trending market, expecting it to continue. And because of that, in this trending market, in this case, your direction is down, not up. Then you'll be looking at the lower time frame, which is the 15-minute, to find your entries. So for example, here we have the same trending market. So if you look for your level, then we've got your next trend. So the 15-minute will give you that entry, and therefore if you have a tighter stop loss, let's say, you also have a greater, you have your risk and you have your reward. So of course, this is going to happen much quicker. The candles will appear much quicker and you've got a lot more information. It's a lot busier here on the 15-minute. But use the clean higher time frame to really get your bias and then switch to the low time frame to have a little bit more of a precise entry, precise parameters for your trade. So let's just delete that off the page and let's look at it cleanly again. How do we do this in practice? Well, let's say that we have once we see the trend and we have our next level, let's say that this was the same level. Once the market pulls back into that level and we have some kind of reversal pattern here inside of our zone, then on the confirmation of that reversal, we will have a validation above point or stop loss, and then continuation to our intended direction. And this means that you have your risk is less pips, whereas in the high time frame, it would be a lot more. You'd also, of course, need to put that together with the price points, with significant areas, levels. In this case, you can see we have the 106 whole number. You may be aware of the significant whole numbers, and you may also be aware of the ways that we pick using the currency futures. If you haven't seen that, go watch the currency futures video on picking the highest probability, strongest trending markets. So that will all help you. And once you've actually got that pair and you've you've drilled it down, you've selected what's the strongest trending pair, you picked your time frame, then you've gone down into the trend, you've identified where you're at, and this will work well in those scenarios. So we don't want to be trading in these kind of environments because they are just messy. Once we get a clear trend, that is the best scenario. Now, if you are planning, I'll just give you a few words of tips just from personal experience. If you are planning to trade multiple timeframes and combine them, then it will be wiser, I would say, to choose one pair or maximum of two pairs to trade, or two markets. Why? Because you're going to get a lot of noise and you've got conflicting time frames. So if you're going to use like here 4 hour, 15 minutes, weekly and 4 hour, then you will constantly have conflicting directions. So on the one hand, you will have a buy scenario, on the other hand, you'll have a sell scenario. And that will create confusion. If you're only going to use one time frame or one combination, then multiple pairs are okay because it takes time, and then you can look between them and see which one is actually playing out and pick that one. So hopefully that helps, and these are some top tips. So first of all, first rule is if you don't have a clear higher time frame picture, then it's not a trade. That's important because some people this will help you to avoid getting in too early and getting confused about should I or shouldn't I. It's just a natural filter. So once you've got the high time frame really clear, really precise, and you're happy with it, it's high probability, then you can actually look at the lower time frame, not before. Next, just mark your areas or zones in advance and then wait for the price to get there and create a reversal pattern. So if you've got a trending market and you're expecting a retracement, let's say this is your zone or area that's interesting to you, wait for the price to reach that area. You're not trading here. You're not trading here. You're only trading inside of this area. And then you know that this is your point of focus and this is what you're going to target. Of course, price may not reach there. It may head away, but that's fine. It's always best to wait for what you planned. And then if it happens within your area, if you get that, lower time frame reversal, then there's a higher probability. And it is a case of really waiting, not getting impatient about when it's going to get there. We allow the market to do its thing when it does it. So do that in advance, and then you sit back and you wait to see if that happens. And then thirdly, definitely know which time frame you're using and stick to it. So that would be my advice, because you will get used to the time frame itself. Candles look different. If you look on the monthly picture, for example, the candles are not as smooth. They don't show you as much price action. They're not as clear as the lower time frames. We have more information. So that's it, really. There's not much more to say on that, apart from you will need to know what style of trader you're at. Of course, if you're a scalper, you will lose the lower time frames. And if you're intraday or you are a swing trader, you will use 4 hour or above for swing trading. And that is it. So let's just recap. Here's your guide. If you want to write that down, I'll take a screenshot. And those are the combinations that I use myself. And that's it. Thank you for watching. And remember, analyze on one time frame and enter your idea on the lower one. Use multiple time frame analysis. That's it for today. I will see you on the next video, guys. And if you want to check out the video on the currency futures and how to use that to really find the strongest trend, a really good trend in specific market specific pairs, then go to that video. Okay, bye for now, guys.